And just in terms of the whole rate cut debate for tomorrow, we just got a pretty strong manufacturing number. Industrial production rebounding in August, up 0.6%. The stock market is 1% off a record high. Does it still make sense for the Fed to be cutting rates tomorrow?
I kind of think it probably still does make sense for the Fed to cut rates. It was good to get that strong manufacturing number because it follows a couple of months of fairly weak and surprisingly weak numbers. But as Steve will tell you, as the Fed was running up the rates, I was pretty skeptical because it didn't seem like if you looked at conditions that they were so much better that they would warrant tightening. So I don't think that one or two small, better than expected numbers ought to change it from that path.
Yeah, it's a good point. Steve, also just wanted to bring into the conversation what everybody's buzzing about right now in the bond market and beyond. We got this cost of borrowing surging overnight in the repo market. I mean, it's short-term lending market. Of course, whenever that happens, it makes people worried about Liesman and credit tightening and a dollar shortage. And I'm just wondering how big of a deal you make of this and how you can explain why people are paying attention to it.
Okay, it's a touch premature, Sarah. I do appreciate why you're asking the question because the markets are abuzz with what's going on. This is plumbing. And plumbing creates leaks, and leaks can create damage. And that's really the way to think about it right now. Sarah's right. The overnight rate for repo, which is to finance paper out there, it blew out. The Fed came in, did an operation. I understand it, withdrew that operation. They spiked back up, and now we're waiting. I think in the last 10 minutes or so, the Fed injected $75 billion of liquidity into this overnight market. We'll see if that calms things down. Sarah, the reasons I'm hearing have to do with perhaps corporate tax payments, perhaps end of the quarter stuff, and concern about the idea being, I don't know if I'm going to be able to fund this paper, so I go in and I do it earlier. So all of a sudden, there's a huge demand. It may be something that the Fed's liquidity can work out. The reason why there's such concern and why also I don't want to raise the level of concern, this is what happened in 08 and 09. It was a real sign of problems out there. Nobody I've talked to so far, Sarah, has gone that far and told me this is a big issue right now. Yet, they're watching it. They're concerned. It is a blowout. It may be that it can be solved quickly.
Yeah, I mean, really good explanation. We haven't seen anything comparable in LIBOR and other kind of indicators,
exactly.
Austan.
Good point.
How do you think, Austan, about these kind of indicators of potential growing stress in the system and how vulnerable we are right now?
Well, you know, our strongest part of our economy, which has still remained pretty strong, has to do with the job market and consumer confidence and consumer spending. And the weaker parts have been capital investment kind of got a little softer. You see some of these plumbing issues. I wouldn't be surprised if they look back and the diagnosis had something to do with the weird movements in the price of oil coming about from the events in the Middle East. Maybe somebody's heavy in that space and they got some problems. I think the danger would be, though the consumer confidence and consumer spending has been the thing kind of bullying us up, that can change if confidence flips around, and it can change pretty rapidly. And when we have had recessions, every single recession post-World War II, since we've been keeping the data, began with a big drop in consumer confidence. So I would just highlight, we all got to keep an eye on those consumers. And if tariff wars escalating or gas prices going up or war in the Middle East or any of those things were to flip that, then I think there would be some pretty serious danger ahead for regarding recession, not just slowdown.
Hey, Steve, finally, Fed funds futures suggesting maybe a chance that there is no cut this week. What do you make of it? Is it overstated?
So, Carl, remember I said that Sarah's question was premature? The reason is because I've not had a chance to report how the blowout in the repo rate is affecting the Fed funds futures market. I would suggest right now that estimate is correct that you read, but I would take it with a grain of salt. It strikes me that the blowout in the repo market is affecting the calculations in the Fed funds, but I've not had a chance to run that by the guys who calculate these Fed funds probabilities. I would go with our survey. I believe there's a 100% chance that there's going to be a rate cut I think that's the right way to think about it. I think that is probably what the future should be showing. But I'm going to go and do the work on that now, Carl.
Yeah. Well, no, Bank of America has a note saying that the repo pulls the Fed funds effective rate
good.
higher.
That's
so
what
it is,
I would
it
have
is
read before I came on, yes.
I just have a final question, Austan, maybe to tie everything together here with what you said. It's about the U.S. consumer. How do you think about this oil shock? Double-digit rise, one of the most historically big rallies we've seen in oil, and whether the consumer in the U.S. in 2019 can handle that.
Well, I think if it's going to be this, that the price is going to go way up one day and then literally the next day is going to come way down, I don't think that'll affect the consumers very much, because where the rubber hits the road, if you want to call it that, is at the gas station. And I don't think the gas stations get out and change the sign as frequently as that. If this is a sign that we're going to have massive uncertainty in the Middle East and that we might start seeing more cruise missile or drone attacks, or Saudi Arabia is going to get into extended conflict with Iran, then I think for sure that's going to affect consumers, because that's going to affect the price of oil. But it was good news to see oil going back to normal and them saying that they're going to be able to get this back online.